our OSAT business in power management. So that helped us. We took a 12% headcount reduction previously, so that has helped us reduce our costs. Now, unfortunately, in Hana USA, and this hasn't happened for a long time, we swung to an operating loss. And the reason is that the RFID inlay has started to engage in a price war, which has hit margins. And this is not untypical. When the business starts to grow, everyone jumps in it and tries to take market share. And unfortunately, coupled with that, we saw a weakness in our tire tag business, where margins tend to be on the higher side. So these two issues were a problem. Even our inlay business increased, the margin dropped as a result of this price war, which is now engaging. Hana Cambodia maintained operational profitability. They benefited to a certain extent from the transfer out of China and an improvement in operating efficiency. In terms of the impact on the Thai baht exchange rate, the overall negative impact in Q3 was about 153 million, of which 129 million related to operations and around 24 million to non-operating. And cash reserves increased 2.5 billion baht year on year as a result of a reduction in inventory, conversion to cash, and a reduction in capital expenditure year on year. So moving on to each operation. So quarter on quarter for Lamphun, we were down 4% and 26% on the year. Again, I remind you that these numbers, you can't really compare them, because as we move further into some of the consignment model, you will see that our top line won't grow, but the margin will grow, okay? All things being given equal. So the same key sectors were the main drivers: automotive, industrial, test and measurement, medical, and commercial. Our new solid-state cooling device, we continue to work on the contract negotiations, which we hope to conclude before the end of this year, with a plan to expand and start mass production in the second half of next year. Actually, it'll be before that, but we have to wait for machinery to come in. So the impact probably be more felt towards the second half of next year. And of course, the strong baht, continues to put pressure on all our operations. But I would say that for Lamphun, we have quite a strong pipeline of new projects. We feel quite confident about next year's growth. Moving on to Hana Micro in Jiaxing. So sales were down 9% on the quarter and 29% on the year. Mainly, of course, because a lot of our customers, because of the tariff issue, asked us to move out. And as I mentioned, part of that will go to Cambodia. Nevertheless, our access control was still held up quite well, because a lot of that goes to Europe, not America. And our RFID business, which relates to the business in Ohio, increased in the Q3 and will further increase in Q4. And as I mentioned, even though that's increasing because the margins have dropped, that's become challenging for us. We also did a retrenchment to realign the overall cost base, as opposed to, in response to the fact that we're losing business or transferring business to our other divisions. But we remain positive despite that difficult situation in the micro division. So Hana Yutia, we saw sales up slightly 5% of the quarter, but down 9% on the year, mostly driven by mobile, but continuing weakness in automotive and industrial due to tariff issues. As I mentioned earlier, the utilization now is running at an all-time low, around 40%. And when you add that to the stronger Thai baht, that really hit us quite hard. We have taken, unfortunately, a headcount reduction in this division as well. which will help us going forward. But the outlook for the fourth quarter is not particularly, not rebounding yet. Although we do see some of our small customers starting to show a bit of an improvement. But the key one is our big customers, and they are still very hesitant about the fourth quarter. Our marketing team is in the US now, doing the rounds, talking to everyone to get an update. But we think it's going to be more towards the middle of next year before we start seeing any meaningful increase from some of those major customers, hopefully in relation to the situation settling down for tariffs. For the IC for Jiaxing, they did actually a lot better. We saw an increase of 31% in the quarter and 76% on the year. And that was predominantly due to our EV module activity, which has expanded quite significantly. Also, our SiC power discretes, that's the packaging part of the SiC, is seeing an increase in activity. But our standard IC is still very, very weak. And we actually exited some of those product lines because we were making a gross loss because the pricing is really, really challenging in China. And we cut headcount also around 12% in order to do that. So losses, we're still losing money in Q3, but the losses reduced substantially, and we're getting quite close to break even. I think we might be there in the fourth quarter. So you can see from this chart, despite the difficulties, we see actual loadings increase, but the margin is not there. And the exchange rate, unfortunately, doesn't support that situation. Smartphones, you may know that it's one of the areas that haven't been tariffed, so hasn't really been impacted as a result of that, and is growing, quite reasonably, given that it's a fairly mature market. The introduction of AI-enabled phones has given it a boost, and we think that this year will end quite well, and next year is looking quite positive for the smartphone business. But you're not going to see double-digit growth because it's a very mature industry. In terms of the overall semiconductor market, so it's the same story. AI-related semiconductors have performed very well, logic, memory, and sensors. Whereas the legacy business, automotive, industrials, PC, smartphones, they're the challenging areas. Although, in some cases, like I mentioned, smartphone not doing too bad, but not seeing the kind of huge growth that we see in the AI-related semiconductor sectors. So, as I mentioned, Ohio unfortunately struggled. Despite our inlays growing 80% year on year, the margin drop was significant because of this price war situation. And as I mentioned, coupled with a drop in demand for tire tags in Europe, that impacted our operating margin. And so we registered an operating loss for the first time in a long, long time in that division. We saw microelectronics grow a little bit, 8%, but from a small base. And the fourth quarter is also projected to see some higher in-there sales, but probably not enough to turn the corner just yet. Now, that said, we do have some good news. We have won a couple of quite substantial new opportunities in inlays, and we must increase capacity to offset the reduction in the margins. Okay, so at least the good news is that this is an industry which is still growing quite strongly, but because of that, everyone jumps in it to try and take advantage of this growth sector, one of the few growth sectors that are around. But we have won some new opportunities, and we're going to be investing some money both in China, which supports our US market, and also obviously in the US itself. We have the space to grow, so we think that this will support getting us back to profitability by the middle of next year sometime or sooner. Moving on to Cambodia. So they have benefited, obviously, from the situation in China, because we had to move certain operations over to Cambodia because of the tariff issue. And as you know, Cambodia is now same as Thailand, 19%. I'll talk about tariffs in a minute. So I think our customers accept that this is, basically Asia is 19, 20%, and we settle down and start moving forward. Unfortunately, the Thai-Cambodian tensions have not helped us, has impacted. We can still run, no problem, but we have to incur additional logistics costs, which is annoying. But by and large, it has not stopped us operating in a normal way. Okay. We have some new activities. We're starting with a customer on medical devices, starting in the second quarter of next year, which is looking very promising. And overall, as we end the year, I think sales will be pretty similar, but overall, Cambodia will be profitable for the year, which I can say is the first time, which is good. Okay. So here's a snapshot of the end product. So if you look at telecom, this is where telecom equipment is where the customer, some of the customers where we've agreed to move from turnkey to consignment model. That's why you see a big drop. It's not the business is dropping, it's just that the way we are running the business is dropping. If you remember, we discussed this in order to manage our top line. This does not mean the business is going, it just means the business is changing in the way we do it. Okay, and this will continue for a while until it settles down. Okay, PMS. So we were up 52% on the quarter, but down 39% on the year. And as I said in the introduction, we continue to see very, very difficult market conditions for both silicon and silicon carbide. And this is specifically in China. And of course, what it does is that it kind of impacts to a certain extent outside China. But fortunately, the pricing in other markets is not as aggressive as we're seeing in China. This is the classic example of massive overexpansion that we see in things like PV, EV cars, semiconductors, where China has just strategically put in huge capacity because they want to be independent. They don't care about making money. So this has impacted our ability to make sales in the country. Of course, it's a big market. This is going to be challenging for some time to come. We have been and we continue to refocus on Korea and Indian markets. We cannot give up on the China market because it's a big market, but we have to support the China market, which I'll explain later, from China foundries, because there's no way we can produce outside China and Korea and sell profitably in China. We're focusing putting a lot of effort into new product development, which is going to be key for our survival. And I can report some new products that have now entered the market and are undergoing evaluation. So we'll see what kind of market acceptance we will see, and I'll talk about that a bit later on. We've introduced the next generation 3 of our MOSFETs, generation 5. And the generation 5, a trench version, is the one we have a high hope for because the Chinese manufacturers still do not or unable to produce this technology. The minute they get it, they dump the price. This is typical China model. They haven't done it because it's not easy to do. And we'll be one of only 4 companies that have this technology when we launch it in Q2 next year. So this is our hope that we can produce this in Korea because it won't be killed in China going forward. But I don't know how long for because, they have their own development teams, but this is not easy to develop. So you may recall I put a slide up like this the last time we talked, and we talked about the plans and how we're going to manage the situation. So I just wanted to follow the same format and update you on what's been happening. So for silicon, you remember I talked about selecting a China foundry partner, which has been done, and we're starting mass production now. Okay, so this is going to ramp up, and this will allow us to continue to fight the China market and stop producing in China in Korea to fight the China market, because everyone we do, we lose a lot of money. Okay, now this will help, but it's a slow process because you have to ramp up. It takes time. Okay, but at least it started, which is very important. Secondly, we're going to do the same thing with silicon carbide because it's the same story, and our engineering team have gone over. We're working actually on 2 partners potentially in China for SiC, and we target to possibly use both, but certainly one by middle of next year. Again, the same model. We build parts for China in China. Okay, because apart from the price, Chinese companies will not buy product unless they really can't buy anywhere else, unless it's made in China, because they have a direction from the Chinese government, China for China. So you have to be in China if you want to fight the China market. Now, for Korea, we again have a different model. So as I mentioned earlier, we're targeting to open our facility as a foundry. This is with silicon to start off with, okay? And we have signed contract with a Korean company, which we project will take up 1/3, initially 1/3 of our capacity, and we start to ramp up in the second quarter of next year. We've been undergoing the development because it takes time, and you have to develop it, then you have to test it, and then there's usually some issue, then you change it, then you test it again. That's why it takes time in order to get to a position where both parties are happy to switch on mass production. But at the rate we're going, we believe this will happen at the middle of next year. Okay, and the initial demand is 1/3 of our capacity, but I feel, I have high hopes that it can be a lot more than that going forward. But they want to make sure, that we can perform, and we start with that first. So I think this is a very good start, and it will help us tremendously. Okay. Expanding the portfolio. So as I mentioned earlier, the reason we went into this business, at the very beginning, was because of the need to produce silicon carbide for the EV industry. That was the big driver of the silicon carbide sector. And we all know that EV cars now are not growing at the rate that people hoped they were growing. Actually, in China they have, but the rest of the world they haven't. But of course, again, in China, you have to compete with the Chinese models, which is very, very difficult. So what our development team have been focusing on is how can we develop other products, and enter into different sectors, okay? And we've developed our first generation of silicon carbide devices to support some consumer market products, which is very challenging because up to now, these products are served by silicon, which is significantly cheaper than silicon carbide. But there is a way of being able to reduce the size of the silicon carbide to the extent where we can match and possibly exceed, in some cases, the pricing on silicon. And of course, silicon carbide is a much more robust material than silicon. So we have high hopes that we can enter these markets, and products have already been taken out, and samples have been made, and they're currently being sent out to a whole bunch of interested customers, and they're undergoing their qualification processes. So we should have a much better idea of the acceptance of this product by, I would say, middle of Q1 or end of Q1 at the latest. And if successful, I think that will give a significant boost to our silicon carbide production, which we plan to start off in Korea first, but at the same time, we will target the China foundry also to produce this, because again, we expect the pricing to go down later on, and we need to be prepared to support that in China. So in terms of liquidity, our EBITDA was 384 in the third quarter, down 100 million baht from 485 a year ago. As I mentioned earlier, we've been controlling our capex and cash out very carefully. We only spent 130 million versus 330 million a year ago. And as a result of that, and obviously a conversion of inventory, we saw a substantial increase in our net cash to around 11.5 billion. That's 2.5 billion baht up year on year. And that's important that we, as we go through these difficult times, that the balance sheet is strong. We all know the baht continues to be strong as the dollar is under pressure, thanks to Mr. Trump. The Fed will meet soon. Let's see what happens. But it's come off its lows, but it's still pretty weak at around 32.50, 32.30, something like this. I want to touch on a little bit about tariffs. This made no substantial changes other than the details have been delayed. And you may have read in the press that the Thai government and the American government continue to negotiate. And so whilst they've agreed a 19% tax level, what they haven't agreed upon are the details of what constitutes a certificate of origin. And the higher the content, the more difficult it will be for a Thai company, particularly electronics, to get the certificate of origin. So this is still under negotiation at this point. As of now, whatever we send to America directly, which is not much, but I'll tell you that later, it's 19%. But at some point, there will be a decision about what constitutes a certificate of origin. Okay. However, I don't know if you've been watching the news, there is potentially a sting in the tail, because what the Americans have said and I'm sure it will be applied to Thailand, is that in the final negotiation or the final agreement, whatever the agreement is, they'll add a clause that if you do anything that we, the Americans, believe is detrimental to us, in other words, you do something I don't like sign a deal or work more closely with China, I have a right to cancel the agreement. Right? I mean, we call it poison pill. So basically, if Thailand signs some kind of agreement with China, which the Americans do not like, they will just say the 19% is finished. Sorry, start again. And this will happen not just to Thailand, it will happen to all Southeast Asian countries. This is just the way the US administration works now. Okay. They'll, in the end, it's not really a negotiation. They'll just tell you how it is, and you're going to have to decide what you want to do. Okay. So bear that in mind. This hangs over all of us, and let's see what happens. We're going to have to be very politically expedient. And just to remind you, Hana's tariff exposure, okay, for OSAT business around 4.5%, and our EMS business 30%. This is the amount of our revenues that are directly shipped to America. Okay, so it's not a big amount. However, of course, a lot of the stuff we ship to other countries will then be put into a product which is then shipped to America as well. So, of course, indirectly, we will be impacted. And for now, certain electronics like IoT, medical, mobile, as I mentioned earlier, semiconductors from companies producing in the US are exempt at the moment. Hopefully, this will continue. Okay, having given you, details about the difficulties we've experienced in the third quarter, I just want to give you some near-term outlook, okay, to give some idea of how we see going forward, okay, because I know you're going to ask me this question. So for PMS, I'll go through each operation. This price war, I believe, will continue in China. We are hearing of Chinese companies starting to going to bankruptcy or being forced to merge. So this is good news, but it's going to take time. So prices are not going to go up anytime soon, unfortunately. We will progress, as I mentioned earlier, to build our products in China for the China market. And I believe we can get reasonably competitive, or at least play in that space without losing a huge amount of money, because we are using the low China price to fight the low China market. As I mentioned earlier, we start the business for our Korean customers in Korea, and that will have an impact by the second quarter. We're going to focus on both Korean and Indian markets with the PMS brand and white label partnerships. We are aggressively discussing with a number of customers who are interested to basically take our product, put their name on it as white label. Okay. However, the current losses will continue as they are now through at least till the middle of next year, I think. However, if we can execute on the above, we should start to see a reduction happening at that time. And if the new products that I spoke to you about before are accepted well, then that loss should start to reduce more quickly as we move through the second half of next year. Okay. For Ayutthaya, we think the weak demand will continue through to the early part of the second quarter of next year, through the first quarter and maybe part of the second quarter, from what we understand from our customers. Although, as I mentioned earlier, we see some signs of recovery coming from some smaller customers, but they're not going to move the needle substantially. Okay. We think that we can return back to a positive operating profit by the end of the second quarter, say the middle of next year. Hopefully the Thai baht will not hit us too hard. Okay. In terms of our OSAT business in Jiaxing, because of the reduction in headcount that we took, and the increase in our power management and EV modules, I think we have a good chance of returning back to operating profitability by the first quarter of next year. Moving on to EMS in Lamphun. So our demand remains quite firm. As I mentioned earlier, the top line will not go up much because of the transition to consignment model, but the margins will increase. We have a number of new product lines that will start to ramp up by the middle of next year. So, we're quite happy about the new business outlook there. And I would say overall profitability is still positive for that operation. For Jiaxing EMS, it's stabilized, assuming the tariff thing calms down now. And I think that we will continue to be profitable, albeit, of course, at a lower level that we've had in the past. But at least we've adjusted our cost base and it's stabilized. Cambodia, I think will continue to be profitable for the rest of the year. I hope that the border will be open maybe sometime in the second half of next year. If we have a new Thai government that maybe can negotiate, I don't know. Otherwise, we have to absorb these extra logistics costs. It's not a huge amount, but it's annoying. But we do expect to remain positive for 2026. For RFID, the price wars will not stop and margins come back. Once the margin goes down, it stays down. The only way to mitigate that is to increase capacity. And that's what we're doing, because fortunately we have won some quite substantial new projects. Again, of course, at lower prices, but I think we can offset the lower margin with higher volumes. And it's a big market out there. And I think that we can get back to profitability, not later than the second quarter or the middle of next year with this expansion. Okay, so that's it from me. Please feel free to ask any questions.
Hi, Richard. I have two questions. The first question is on PMS. Just want to make sure that in the third quarter there is no any impairment on PMS raw materials or inventory, something like that.
There's some small amounts of impairment on raw materials, yes. And there will be some small amount of impairments on raw materials in the fourth quarter as well. Because if you remember, when we took that big impairment at the end of last year, actually I wanted to write down all the material, which is, the price has dropped so much that material cannot be sold at that price, right? But the auditor will not let me do it until it's gone at least 9 months.
Okay, so can you give us some idea of the portion of that portion?
It's not going to be massive, okay? Because it's just some raw materials.
Okay.
But I know you're going to ask me the question about overall impairment. So every year, the auditor will look at a business like PMS, which is underperforming, and I'm not hiding it, and we'll look at our forecast and will decide whether they feel an overall impairment. I'm not talking about material. An overall additional impairment on equipment will be needed or not needed. Okay. I don't know whether that will happen or not. I hope not. I don't think so, but I'm not saying it will not happen.
Got it. And the second question, I just want to know the reason for the delay of the new liquid cooling device. I didn't catch that. What you just mentioned on the reason for it to be being delayed from the first quarter to the second quarter and the second half.
We need certain equipment which takes time to be ordered.
Okay, thank you.
Hello.
Hi.
Hi, Richard.
Yeah.
I understand you do not share the exact loss figure for PMS, but can you comment on the trend of the operating losses compared to the last quarter? Because your sales have gone up like 50% quarter-on-quarter. Yeah.
So the sales go up, but as I mentioned earlier, we are still producing in Korea and selling in China in order to keep our market share, right? So as the prices fall down, that every time we sell something, we make a bigger loss. Now, as I mentioned earlier, the object of the exercise now is to stop producing in Korea and start producing in China, which is now starting.
Okay. I'm not sure if I understand this correctly, but marginal cost is higher than marginal revenue right now. And the way to resolve this is to quickly ramp up production in China, which is going to be sometime around mid next year.
Well, for silicon, it would be earlier. It would be Q1. We've just started, but it will start being more meaningfully in Q1 or around middle of Q1 next year. So you're right. We need to stop producing and stop selling product at a loss.
Okay. So for the time being, the higher sales mean higher losses.
Yes. In some cases, yes.
Okay. Sure. So this trend should revert in second half of next year.
Exactly. Absolutely.
Got it. And for your existing customer in Korea, do you have a roadmap of how they're going to ramp up?
So as I mentioned earlier, we've signed an agreement with a company to produce a silicon product, not silicon carbide, okay? But they have to give us their recipe and everything, which they have been doing, and we are going through the process of qualifying. And we hope that will be ready by the middle of next year, or maybe a bit sooner. And then they will start to move quite quickly. So we estimate around 1/3 of our capacity is possible with this customer. And if they're happy, that could go up more than that. But we won't really know that until the second half of next year.
Right. And at this point, do you need to inject more capital into PMS?
No.
Okay. Sure. And for your capital management, you have a lot of cash at hand and you do not need to inject more capital into PMS. So do you think there's a possibility of shares buyback or higher dividend?
Well, at the moment, I don't plan to inject more capital into PMS, but I don't know what the future will be. So that's why I'm being very cautious on my capital management.
Noted. Thank you very much.
Hello.
Yep.
Yep. May I ask a bit more on the PMS? I'm not sure if I got this right. You mentioned that the more you sell, the more losses that you make. Is this level of loss just caused by the raw material price being higher than the selling price, or that other operating costs in Korea is too high?
It's principally the operating cost in Korea is too high. Part of the products which we have been selling and will soon end is the legacy materials that we bought when the prices were higher. Okay, so we have to get rid of that. All right. But generally speaking, the price of processing materials in China have come down so much. And by the way, they're also losing money. Okay. That there's no way we can produce those in Korea and make money.
Right. So when you move to China next year, should we expect that this portion of business will be profit making or just make lower losses?
It's a very dynamic situation at the moment. Even with the low costs that we are getting from the Chinese foundries, there isn't going to be a big margin, but it is a lot better than us producing it in Korea and selling it.
Okay. And I'm not sure if I get this right. This apply for both of the standard SI and SIC?
For SIC, it's moving that way also for SIC. That's why I mentioned that we're looking to also partner with a SIC foundry in China. Okay. But I think if you listen to what I say, what the big picture is that we will need to produce all our devices for China in China in order not to lose money. And we will try to produce products in Korea for outside China, like India and Korea, where the price structure is higher.
Thank you.
Okay.
คุณนิชาร์ดครับ Tan from Gascon Securities. So correct me if I'm wrong, but like last year, at the end of last year, when you decided to outsource the silicon production to China, and you decided to move some of the machine to the factories that you partner with. So at that time, you take like a write down of assets, right? 1.8 billion. And right now you decided to do the same for the silicon carbide. So I'm not sure if that will likely result in another write down of assets, or you just maintain the machine at your plant in South Korea and just outsource the order to China.
So
which one is the case?
Yeah, let me correct you. I don't think you understood correctly. When we took the write down, we did not transfer the machines to anywhere. They are still in Korea. Okay. But because they are not generating revenue, then from an accounting point of view, we make an impairment or write down. Okay. So the write down was predominantly silicon machinery. Okay. Now, since that time, as I mentioned, we have found an opportunity to use that machine for a Korean company. Okay. For the silicon carbide, it will be the same thing. We will move the work over to a silicon carbide foundry for China, but we will not transfer any machinery to China. We will try to use that machinery to build parts for non-China sales, and specifically for some of the new products that we are developing. But that won't come until the second half of next year, as I try to explain.
Yeah, so there is no movement of machine whatsoever.
Right. No movement of machine. Absolutely correct.
Okay, thank you.
So there's a question in the box about, can we expect a lower loss from PMS in Q4 by transferring? It won't be that quick. No, the losses of PMS, I think, will continue similar to what we've had to suffer until around the middle of next year. That's what I'm trying to explain to you. But when the other activities that I'm talking about hopefully start to happen, that situation, I hope, will change and the loss should start reducing.
Richard, I have a follow-up question on PowerMaster. So, as I understand, most of the cost at PMS is fixed cost, like depreciation, staff costs, etc. So how does producing in China lead to lowering losses when most of your costs come from fixed costs?
Because at the moment, I'm not even having a positive contribution to that fixed cost. So actually, if I stopped totally, became a fabless model, then obviously that would be the best situation. But then I would not be able to have the opportunity to produce for other markets, which we believe we can, because as I told you already, we've got a contract to produce parts for a Korean company on the foundry model, of course, at a much higher price than the pricing in China. Okay, so the raw materials that we've had to use, of course, we're making a huge loss on, but that part should reduce as we get rid of that and we buy fresh material at a lower price.
Right. So for PMS losses to go down, you need to complete the transition and to ramp up production for your Korean customers. So two things need to happen.
Exactly.
Okay. Thank you.
Hi, Richard. If I could follow up on some questions. Just on your Korea side, given that there's been some rejig to become a foundry business and then you become a fabless on your own with China's outsourcing, in terms of wafer per month, do you mind to remind us what would be the split in terms of silicon and SiC, and is it still 40K out per month?
Sorry, could you repeat that a bit slowly? Sorry.
Given that we are doing this whole restructuring of you're going to outsource a lot of production to China, and your Korea site will be on a foundry business basis. Do you mind to remind us on what's your capacity again, and what is the split between silicon and SiC?
Oh, okay. So okay, let me just clarify that we offer our facility in Korea as a foundry, but we are not giving up on our own product. Okay, so let's just make that clear. Because typically foundries just do foundry work, right? So we kind of like a bit of a hybrid here. Okay.
Okay.
In terms of our capacity, we're running for silicon around 4,500 wafers per month, and depending on the model type and the number of layers. And for silicon carbide, we're probably running around 4,000 capacity per month.
All right. And when you say that the Korean customer may take off 1/3, are we referring to 1/3 of 4,005 or 1/3 of 8,005?
No, the foundry is silicon only, so that's 4,005.
All right, got it. And for the SiC part of that 4,000, it will still be having some composition of internal consumption, and then you will have to look for a potential off-taker for the rest of the capacity, right?
So for silicon carbide, you mean for silicon? I think what we will do is we will continue to push to try to find additional foundry partners, because as I mentioned to the previous question, there's no point us making silicon parts in Korea once I can get them made in China. But there are some companies, like Korean companies, who do not want them made in China, right? So that's the potential. And we've got one, and maybe we can find some more. That's what we're trying to do, okay? And for silicon carbide, we also will now offer our facility to anyone who wants to produce silicon carbide on a foundry model as well.
Okay, got it. And the incentive for someone to do that will be the similar incentive for the same reason they go to you for silicon in Korea.
Yes, the only reason why somebody's willing to pay more, because obviously it's going to be more in Korea than China, is that they worry that China will steal their design.
Right. Okay. Got it.
Otherwise, forget it. Or the other thing is, as we have seen with Nexperia, when you give everything to China and then there's some geopolitical issue, then they just stop.
Right. Got it.
Right.
And would you say where is the minimum run rates that you need to break even for this, both silicon and silicon carbide? Is it 70?
It very much depends on the pricing. So I don't really. Yes, we have to be very close to full, even to break even now, because even with the higher prices in Korea, they are still influenced by the lower prices in China. So when we went to this business 6 years ago, the world has totally changed, unfortunately. Okay.
Right.
Yeah.
Okay, got it. And just one last question. Maybe talk about raw materials that you have to deplete the higher cost raw mats that you got earlier and have fresh new raw mats at a lower price. Just wondering how long do we need to deplete those, or how much more of the old inventories at higher price are you left with? Is it 1 quarter, 2 quarters?
Yeah, no, Q4 is the end of it.
All right. Okay, got it. Thank you so much, Richard.
Hi, Richard. Can you hear us?
Yeah.
Okay. I have 1 or 2 questions. Do you see any shortage in raw material that pulling off to the AI industry, or at least the server product that occur in the industry right now can cause you a little problem on any shortage or any revenue slowdown from now?
No. I don't see any impact on the huge ramp up for AI related components affecting our business.
Okay, thanks. And one more question to follow up that. Do you have a capacity to do the advanced packaging in both the GPU or the memory system right now for the industry? Thank you.
Yeah, the short answer is no, we don't. You're talking about 2.5 and 3G, 3
D, right?
D packaging. We actually do some kind of 2D, right, which is side by side, but the 3D stack is something that we do.
Okay, thank you so much.
Yeah. So there's a question about the write down. Much lower than the write down of 174 million. Nothing like that.
Richard, I ask a question on your solid state cooling device. So in terms of revenue, how sizable do you think this business can be for your overall PCBA business?
Silicon carbide?
No. The solid state cooling device that you have mentioned for your EMS business.
I forgive me if I'm hesitant because I've signed an NDA on this. The customer keeps on changing his forecast upwards, by the way. So sometimes I'm a little bit skeptical about it. So it will be a meaningful account, but it's not going to be, it's not going to change the whole group, And I just want to put in perspective, we're currently still negotiating the terms of our agreement because there's a fair amount of investment that has to go into this. which we would like the customer to also, take part in, not only us as well. So, but as I mentioned earlier, I'm hopeful that we can close and agree on everything before the end of this year, because I have scheduled meetings at high level in order to conclude this, and our working team and their working team are working on the details at the moment. So yes, it's an interesting product, and they are dealing. I can share that they are dealing with some of the big names in the AI world. But I'm hesitant to give you any more details than that at this point. Forgive me.
Okay, and in terms of your pre-investments, how maybe you can share a little bit on the credibility of this customer, because there's a lot of concerns going on with the AI bubble and everything. And you mentioned that your customer has been increasing his forecast. So if you have to commit some capital into building capacity for this particular customer, you should trust them a little bit, right? So
exactly. So we're just starting with them. I mean, actually, we've been talking a long time, but we haven't really started yet. And since we're talking, they first of all, we had to do some development work to show that we have a way of overcoming some issues, which is a bit technical, which I'm pleased to say we were able to achieve. So I think that gave them a lot of confidence that Hana technically is quite capable in this area. And then we have to design the process. We have to buy the equipment. The equipment, some specialized equipment, but most of it is fairly standard for us. It's sort of like a semiconductor type of related type of equipment. Okay, we'll have to build our own in-house automation because we've agreed. Typically we start with certain volume. When the volume goes up, they want a cheaper price, so we need to take the labor out of it, right? But it takes time to design the machine, so you start off with a lot of labor, right? Because you can make it, but that cost is high. So as the volume goes up, we have to introduce equipment. So all this process, it takes time, okay? And I want them to put some of the, part of the negotiations is sharing the investment. Basically, I want them to have more skin in the game than they originally, everyone's so excited about AI, they think I'm just going to fall over and just write a check. I said, no, I'm not going to do that, So, this is part of negotiations. And then there's a qualification process, okay? Their end customer has to come and make sure that they're happy with us. So these things take time. That's why I think it's going to be, even though we'll start before then, in terms of meaningful impact on the business around the second half of next year.
Thank you.
So there's a question about why won't the loss go down if we move to the Chinese manufacturer? Well, it will, but it just takes time. Everything in the semiconductor world really takes time because of qualification, reliability, and this sort of thing. So the plan is in place, but the execution will take time. So I've tried to give you my best sort of outlook as I see it. And that's on the assumption that everything goes well, and sometimes it doesn't go well, that we will continue to lose money on a similar basis to what we've been losing until around the middle of next year. And if the action plans that I've talked about are successful, then that loss should start to reduce in the second half of next year. And if even more successful than we think, then the losses will go down more quickly. So, but are we going to turn around the business by the end of next year, the whole thing? No. Okay. But if we can reduce losses substantially, that's already a big impact on Hana's overall bottom line as a group. So there's a question here about would we consider exiting the line of business? Well, at the end of the day, it is just a business. And if we cannot make it work ultimately, then we're not afraid to make whatever decisions we have to make. I don't think that we are at that stage just yet. As painful, and I apologize, as it has been, I still think there's a future in this business. However, we continue to look at potential partnerships with people that definitely, if we were able to execute on something, would fast track the situation. I continue to have discussions with a number of companies, that I think may be interested in being involved in the silicon carbide business once they see it stabilizing. And the question goes on to talk about, are there any long-term risks like gallium nitride? Actually, it's the other way around. Silicon carbide might actually replace gallium nitride. So I think the long-term risk is the ones who are in gallium nitride, not in silicon carbide. I would just like to mention that, but you might want to do some more homework yourself. That's just my personal opinion. I can't give any specific guidance on what kind of loss reduction PMS will have, but I'm working every day of my life now to reduce that situation, and I'm trying to be as transparent as I can, given the difficulties that we're facing of the challenges that we have. So we do have a plan. Execution will be the key at the end of the day. And whether we can or cannot execute well, time will tell. I've given you a time frame that I'm working on. So next year is going to be very critical for us to meet these KPIs that we've set ourselves in order to start having a material impact on loss reduction in PMS, which I'm hoping should start to happen in the middle and onwards next year. So, question on FT1. Again, you would have to ask PTT, who are the lead investor in FT1, but it continues to be put on hold at this point in time. Given everything I've told you about silicon carbide, you would not expect us to add more money to this business again, unless we got a much more substantial support from the government, which personally I don't think will happen. So it's not officially over, but it still remains on hold at this point in time. And is there a risk that what we've invested will be written off? Absolutely. The good news is that we didn't invest such a huge amount. Once it was clear that the market situation was very difficult, we've put everything on hold. But of course, there has been money spent on certain activities. And, if we in PTT decide that we officially will not go forward, there will be some write down there will be an impairment charge on anything that remains in the FT1 company.
Regarding the guy who brings you the potential solid state cooling, is there still a chance that they will turn out not to select us as their partner and selected other competitors?
There's always a chance. I would be surprised given how far we've come down now, and also the processes that we've developed, which are our processes, which I think we believe are probably a very good option for them. But yes, there's always a possibility.
Okay, so your competitors also have those capabilities to produce such cooling, right?
Yeah, there's definitely always another competitor for sure. So until the deal is signed, it's not signed. I fully agree. So I'll make it clear: the deal is not signed yet.
Right. Thank you.
Okay, one last question.
Hi, Richard. Just to follow up on your fabless model in China, given you're going mass production or high volume production in fourth quarter for silicon, do you mind giving us some visibility on how, I mean, you're going into mass production, meaning that there's significant off-takers for those products that you are designing. So give us some color on the kind of a market or the kind of customer profile and what is the upside from there.
So the product is super junction MOSFET. The applications, I would say, are consumer electronics, consumer power management related to consumer. It's all power management, right? So adapters, for PCs, for mobile phones, even anything that needs power has an adapter, right? So it's a pretty big market. And as a result, there are many people in it, and it's very aggressive. And the Chinese cost base, they don't seem to have a cost base. They just don't care. Whatever the market is, whatever the price is, they supply it. So that's why if you can't beat them, you have to join them. The one good thing I would say is that our designs, I think, are more superior than the local designs. But the reality is, for a lot of this cheap stuff, nobody seems to care. If it goes wrong, you just throw it away and get another one. So at the end of the day, within reason, price is really the key driver of who wins market share in this business. Obviously, it has to work, but it's not like you make a product that goes into a car, because if it doesn't work and the car, it's a very expensive item and a very dangerous item, then quality is a much bigger component consideration. But consumer electronics, especially things like, small things that need charging, price is the key.
I see. And just on top of that, the consumer market is, agreeable to be super competitive, but MOSFET is also largely used in your power supplies, which is gaining more demand for, say, server rack level systems. Just wondering how difficult of that to penetrate from your standpoint.
So, well, again, it's pricing. Our performance is as high as all the leading Western manufacturers are. Okay, but again, at the end of the day, it doesn't seem to count too much. They just want a price. But if our product is the same as their product, then they'll take ours because ours is better quality. Okay, with a China price, of course, right? So I have to rely on my China foundry supplier to continue to want to fight and stay in the game.
Right. This competitiveness is also seen in the data center products.
Well, no, I think in data center products, you're not using. I don't think you'd be using this type of device in there. No, that's I think a different market altogether. You're talking about what, like you talk about the sort of server chips and memory and that sort of stuff. That
mostly power supply.
Oh, for power supply, yeah. For power supply, sure. They can use our product. Sure, power supply is a relatively simple product.
Yeah. So just wondering on that part. Demand is very strong. You can see companies like Delta. They're seeing super great demand, and they use a lot of MOSFET from Western guys. Just wondering what is your potential of penetrating those space?
Well, again, you're right. So in the power supplies themselves are in high demand, but the components that go into them, they can buy them at very cheap prices, which is unfortunately where I play, right, at that part of the supply chain, right? And And demand for that, of course, is, relative to the, hyperscalers is obviously still very robust. Okay. I mean, obviously don't talk about valuations of stocks relating to AI, because that's a different, detached from reality. And we've seen the markets correct. And then we've seen NVIDIA announce great results, and then they go back again, and it's up and down. But the real, whether at the end of the day, all this investment will actually turn out to be a good investment, well, I don't know. I mean, you can just look about my decision to go into silicon carbide, because at the time it was a very, very hot, sexy market. Guess what? So is the AI, very hot and sexy market at the moment. 5 years from now, I don't know, right?
Got it. Understand. Thank you so much, Richard.
Okay. I think we've run well over time. Thank you, everyone, for your time, and we will continue to do our best to overcome our difficult situation. So until next time, thank you.
Thank you.
Thank you.
Bye.